Crypto got a massive jolt. President Trump has already signed bold executive orders that could flood the crypto market with billions. We're talking about the US government holding Bitcoin, greenlighting stablecoins, and opening the doors for retirement accounts to invest into crypto. I'll show you what Trump has done, why it matters, and how it could change the future of crypto forever. Before we dive in, just a quick note. This video is about Trump's impact on crypto. Nothing more, nothing less. I'll be honest, I used to watch The Apprentice all the time, but I'm not pro-Trump or anti-Trump. I don't even follow politics, to be honest. I live in Canada and couldn't even tell you who our Prime Minister is right now. I'm here strictly to talk about what Trump's actions means for the crypto market, because that's what actually affects us as investors. Let's start with the executive orders, because this is where everything really begins. On March 6th, President Trump signed the Strategic Bitcoin Reserve Order, and with just one signature, he completely rewrote America's playbook on how to treat digital assets. That single move took over 200,000 seized Bitcoins previously held by government agencies like the FBI or IRS and officially transferred them into what's now being called a US government-owned crypto reserve. Let that sink in. The government didn't dump them into the market. They didn't auction them off like before. Instead, they're holding them. Finally, the government figured out that diamond hands aren't just for Reddit degenerates. They're holding it just like they hold gold, just like they hold oil. This isn't about short-term profit. It's a long-term national asset strategy. And here's where it gets even more interesting. The reserve isn't just made up of Bitcoin. It also includes Ethereum, Solana, XRP, and Cardano. When I heard that, I'm not gonna lie, I was jumping for joy. I've been heavily invested in 6 coins for a while now. And guess what the top 5 are? Bitcoin, Ethereum, Solana, XRP, and Cardano. It honestly felt like I was watching my personal portfolio get handpicked by the US government. I'm still waiting on Cardano to bounce back, but overall, things are looking really good. If this doesn't feel like validation, I don't know what does. It's like the US government has quietly built a diversified crypto portfolio. That's never happened before. No country, let alone the US, has ever officially committed to holding multiple cryptocurrencies as a strategic asset. This changes the entire perception of what crypto means on a geopolitical level. Now that's just the beginning. Trump's Bitcoin reserve move alone could have been a headline for months, but he didn't stop there. In fact, the next few executive orders could have an even bigger impact on your crypto portfolio. So don't go anywhere, because what comes next might be the most important shift in digital assets we've seen in years. Now let's move to the second executive order. This one's all about stablecoins. Trump signed into law the Genius Act. The name might sound dramatic, but the implications are real. This is the very first full-scale federal framework for regulating stablecoins in the US. And what it does is powerful. Under the new law, every stablecoin issued in the United States must be backed one-to-one with real assets, either the physical US dollar or low-risk US treasuries. No more funny money. No more algorithmic maybe-backed stablecoins. On top of that, stablecoin issuers are now required to undergo regular third-party audits. That means transparency. That means accountability. And for institutional players, that means trust. In other words, the Wild West era of printing fake money under the stablecoin label, that's all over. This law effectively draws a line in the sand. If you want to issue a dollar-backed digital currency, it better behave like a dollar. And that confidence is going to attract exactly the kind of players who've been sitting on the sidelines. The banks, payment processors, and institutional traders. All the people who said, we'd love to use crypto, but the regulations are too messy. Now, that excuse is gone. But the third executive order, it might be the most game-changing of them all. Just days after the stablecoin framework, Trump signed another order, this time targeting the retirement sector. The new orders allows 401k and 403b retirement plans to offer access to crypto assets and other alternatives like private equity. And this is massive. Retirement accounts in the US manage over $34 trillion in assets. If just 1% of that money flows into crypto, That's over $350 billion in fresh, long-term capital that wasn't available before. That's not just big money. That's pop a bottle, call your ex, and pretend you've matured kind of money. Let me repeat that so it hits properly. We're not talking about hype money, not meme coin casino cash. This is retirement money. Stable, committed capital designed to sit for 10, 20, or even 30 years. That's the kind of money that stabilizes markets. That creates infrastructure that encourages serious innovation. And this new access doesn't just benefit Bitcoin. Ethereum, Solana, and large cap altcoins could now be eligible to show up in retirement portfolios across the country. Mutual fund style crypto baskets, crypto target date funds. We're likely going to see products that didn't exist before this moment. More importantly, this marks a shift in how digital assets are viewed. No longer niche, no longer speculative. Now, crypto is being positioned as a legitimate pillar of American finance. No longer just a curiosity. It's becoming a core asset class. But here's the thing. Policy is just one part of the story. What's just as important is what's actually happening on the ground. Behind the scenes, Trump hasn't been quiet. In fact, last week, he held a closed-door summit at the White House. But this wasn't just a tech meetup. It was a high-level strategy session with crypto CEOs, Wall Street banking executives, venture capital leaders, and regulators from the SEC, and even international delegates. The theme, American digital supremacy. You see, Trump doesn't just want the US to participate in crypto, he wants to lead. He doesn't want China setting the standards. He doesn't want the European Union calling the regulatory shots. He wants the United States to be the benchmark for how digital assets are managed, adopted, and taxed. And while that's happening in DC, something else was unfolding across the country in Wyoming, the Blockchain Symposium. That event brought together heavy hitters like former SEC Commissioner Paul Atkins, some of Trump's previous crypto policy advisors, and industry veterans who are now rumored to be in line for key roles at the Fed. In other words, the policy is being written in DC, but the blueprint for how to execute it is being drawn in places like Wyoming. Two parallel tracks, government and industry working in sync. And the ripple effects are already visible, far faster than most people expected. Take Tether, for example, the world's largest stablecoin by market cap and daily trading volume. They didn't waste any time. Just days after the executive orders, Tether announced they were bringing on Bo Hines, a former Trump advisor, to lead their US government strategy. That's not some random hire. That's a calculated alignment with the incoming crypto policy machine. Tether knows the playbook is changing, and they want a seat at that table. This move shows us something important. The smartest players in the space aren't waiting for regulations to hit them. They're getting ahead of it. They're adapting, positioning, and embedding themselves into the new framework before it even fully takes shape. Now, if you're finding this video helpful, make sure to subscribe to Crypto for Starters. I post 3 beginner-friendly videos every week to help you stay ahead of the curve and actually understand what's going on in the crypto world, without all the hype and jargon. So let's talk about how the crypto markets are reacting. Now recently, Bitcoin dipped around 6.5% after reaching a new yearly high. A lot of retail investors panicked, but institutional traders didn't even flinch. Most analysts called it a healthy correction, just profit taking after a rally. More importantly, the data shows that institutional buying hasn't slowed down at all. And it makes sense why. Think about what's changed in just a few weeks. Retirement plans now have a green light to invest. A government-owned crypto reserve has been established. Stablecoins finally have a regulatory framework. These aren't just surface-level developments. These are foundational changes. The market is no longer just driven by speculation. It's increasingly being supported by policy, structure, and credibility. And that shift is forcing institutions to pay attention. They're not buying the dips to flip tokens. They're positioning themselves for the long game. That shift in tone is starting to impact banks also. Major institutions are now lobbying to relax the base 3 capital rules so they can hold crypto on their balance sheets more freely. If those changes happen, it would open the door for banks to offer custodial services, tokenize traditional securities, and even issue their own digital assets. These are conversations that would have sounded insane in 2019. But today, they're on the table. Even the Federal Reserve is softening. Vice Chair Michelle Bowman recently floated the idea of allowing Fed staff to hold small amounts of crypto in their personal investment portfolios. And this isn't about making them money, it's about making sure that people writing the rules actually understand the asset class from the inside. That's a huge shift in mindset. It might seem like a small policy change, but symbolically, it's massive. For the Fed to even consider this means crypto is no longer being seen as a threat. It's being acknowledged as part of the future financial system. It's finally getting the respect it deserves. Like when your girlfriend suddenly asks you to meet your parents. Crypto is being woven into the fabric of the establishment, one thread at a time. So what does this all mean? It means Bitcoin is being positioned like a strategic national treasure. It means stablecoins are stepping out of the shadows and becoming regulated, bankable tools for commerce and remittance. It means retirement portfolios, those massive conservative capital structures, can now start quietly accumulating crypto. It means regulators and innovators are no longer fighting, they're collaborating. It means the old world of finance and the new world of digital assets are starting to merge. And here's the kicker. This isn't just about Trump being pro-Bitcoin. This is about deep integration. It's about regulatory clarity. It's about legitimacy at the highest levels of government. Now, does this mean prices are going to explode overnight? Well, no. Let's stay realistic. Crypto, it's still volatile, and political decisions can change overnight. Just like your Uber driver's route when you're already 5 minutes late. And there are always risks in any emerging market. But what's fundamentally different now is the floor, the foundation, the level of support from traditional institutions that's rising. And as the floor rises, so does the investor confidence. This is how hype turns into habit. This is how the fringe becomes finance. This is how crypto evolves into something normal. And like him or not, President Trump is accelerating that shift faster than any administration before him. So here's the real takeaway. This isn't just a new chapter in the crypto story. It's a whole new volume, a new era where policy and innovation are finally moving in the same direction. And if you want to be early, not just to the next price pump, but to the next global financial system, then right now is the time to start paying attention. So with all these new policies and institutional tailwinds, the big question is, how high can Bitcoin actually go this bull run? Is 200K just hype or a real possibility? Click on this video right here and I'll break down the data, trends, and timelines to show whether $200,000 Bitcoin is realistic or just another crypto dream.